Most traders use RSI to find tops and bottoms. But what if RSI's real power isn't in spotting extremes, but in confirming strength? RSI stands for Relative Strength Index. It's a momentum gauge. It tracks the speed and strength behind price moves. But most people look at RSI in isolation. They look for it to hit 70 or 30 and try to fade price. We don't do that at ESDaily. We use 60 and 40 instead. We use RSI over a 13-day period and change our settings to display overbought and oversold lines at 60 and 40, but we don't use it in the same way as traditional traders do. We use it to improve our odds. Why? Because in a strong uptrend, RSI shouldn't dip below 40. And in a strong downtrend, it shouldn't break above 60. If it does, that's our first warning that the trend may be starting to weaken, but it's just a warning sign. Here's how we use it in real trades. If RSI is below 40 and enters into a demand zone, that's something we don't want to see. We want to buy with strength. This lessens the likelihood that price breaks above the most recent high and continues in our favor. If RSI is above 60, as price enters into a supply area, we can see that momentum is not on our side. Price may stall or fade, but it's going to have difficulty breaking down without buyers bidding up any reactions. RSI helps us decide whether or not a level has odds in its favor. We use it as a tool in our core strategy to increase the odds of the trade being successful. Divergence is where RSI really shows its strength. Positive divergence, price makes lower lows, but RSI makes higher lows. That means selling is running out of gas. Negative divergence, price makes higher highs, but RSI weakens. Momentum is failing, and we want to be ahead of that. Here's an example. Price makes a new high, but RSI prints a lower high. We have confirmed negative divergence on the chart. That's a positive signal for short sellers that momentum to the upside is fading. Then, price enters into a supply zone we've mapped out at ESDaily. What happens next? Price breaks down because momentum didn't confirm. Then it pushes through previous areas of support as sellers rush in. RSI helps catch what price doesn't say out loud. Here's your checklist. RSI between 60-40, you're clear to trade. RSI below 40 at demand, momentum not on buyer's side, proceed with caution. RSI above 60 at supply, momentum not on seller's side, proceed with caution. Divergence at a zone equals high-value trade enhancer. That's how we use RSI, not to predict. To confirm. To time. Stack the odds in our favor. We never know where price is going. We can only take high-probability setups that had odds enhancers, the same ones we deliver each morning at ESDaily. The S&P 500 futures deliver just 1 to 2 grade A+ setups each day, the ones that have the potential to create market shifts, the ones where institutions step in, the ones where large orders get filled. Subscribe now to ESDaily to have them delivered to your inbox each morning.